Hi, Sarah. Yeah, quite a nice beat. So for EPS for the luxury home builder, $1 versus the estimate of 83 cents. Now, the estimate was down more than 34.5% from a year ago. Revenue also will be coming in at $1.77 billion. The estimate had been $1.7 billion. Now, as far as guidance, we're still working through that. But the CEO of Toll Brothers saying that low mortgage rates, which we talk about a lot, a limited supply of new and existing homes, and a strong employment picture are providing tailwinds. And you can see Toll Brothers right now up 3.7%. Sarah, I'll send it back to you.
All right, Rahel, thank you. Mike, getting a nice 3.7%, as Rahel mentioned, boost.
For an already strong stock. So it seems like there is some momentum. There's been some false starts with the home builders, in recent years, but it seems like, this boost from low rates and some pent-up demand is working for now.
Let's talk more about it. Let's bring in Ken Zener from Keybanc Capital Markets. Ken, your first reaction here to the numbers and what appears to be a nice beat.
Certainly is a nice beat. They did come at the high end of their volume guidance. They did beat their gross margin guidance for the second quarter. I think really the most important element is that orders did better than the seasonal trends we would have expected. So that bodes well for their forward, revenues versus our expectations and the street.
And what can you say about, I guess, this segment of the market versus other parts of home builders? Obviously, Toll always occupying somewhat the higher end.
Sure. I think for the home builders, Toll does occupy the high end. These order rates specifically are good for them, given the drag they've had coming from California, Southern California specifically. Our macro call really is flight to quality. And what that means is that the builders benefit more than the building product companies from lower interest rate as it spurs new home sales. And that's where you see the most interest rate sensitivity. So the fact Toll is doing well does fit in with our macro call.
Yeah, I was just going to ask about the group in general and whether it's going to continue this nice run we've had and how much is predicated on rates staying low or moving lower.
Well, not necessarily moving lower. The 10-year was at 3.2 in November, so it's come down quite a bit. There's always a lag in interest rates as it relates to housing, but it really affects the new home buyers the most, even if they're obviously somewhat trade up like Toll Brothers. And I think it's a bit more of a lagged effect for the building product companies, whose really main driver of repair and remodel, as we saw with Home Depot this morning, is really tied to high home price changes. So we have a 3% appreciation now nationally, not 6%. So I think that's going to be a bit of a drag for the building product companies versus the home builders. And names like Toll, Pulte, KBH have all been doing well and showing progressive signs of order demands.